The Russian forces are slowly closing in on Kiev. Remember, Kiev, the capital, remains the key. The Ukraine military headquarters has sounded an alert that Russia has regrouped and is ready to strike Kiev any time now. 4 satellite towns of the capital have been targeted so far by the Russian troops. The big question that is now arising, is Kiev's fall now imminent? Let's take a look at what our reporters are telling us.
The heart of Ukraine, the citadel of Ukraine, is gearing up for a mammoth assault. There's a huge Russian convoy slowly making its way to the city of Kyiv. And the Ukraine army has sounded its biggest warning yet to citizens. A top Ukrainian army general has said that Russia's combat-ready units are now regrouping on the outskirts of Kyiv for an assault like no other.
Kyiv is bracing for it. Kyiv has been bracing for it, but now it's imminent. Now it's likely to happen any time is what we are being told as soon as this ceasefire lapses, because this ceasefire is only perhaps the last chance for foreigners to leave this place, for non-combatants to leave this place. And that is why Russia unilaterally has announced 2 ceasefires in 48 hours.
The warning has got Ukrainians living in the capital rattled. The reality that this huge Russian convoy could very soon be seen rolling through the streets of Kyiv.
We got a bad news from Irpin that around 30% of the city is still under the control of Russian troops. And the bad news is that the army of Kadyrov, they're just getting into the houses of people. They are taking their money. They are behave themselves as the looters, as a crazy looters, because they are with the guns, people without heat, energy, without food. It's very hard for them, and the Kadyrov army takes the last that they can take from these people.
Russian troops are now focusing all their energy on capturing Kyiv. Their aggression doubled after this video from Ukraine President Zelensky confirming that he's indeed camping in the capital currently.
Ось вечірній Київ. Понеділок, вечір. Ви знаєте, ми звикли говорити понеділок день важкий. В країні війна, тож кожен день понеділок. Я залишаюсь тут, залишаюсь у Києві, на Банковій, не ховаючись і нікого не боюсь, стільки, скільки потрібно, щоб перемогти у цій нашій вітчизняній війні.
Russian troops, meanwhile, are bombarding cities bordering Kyiv. This is the situation in cities like Irpin, where civilians are fleeing in large numbers. And people can be seen struggling to cross a decimated and broken bridge. Russia is moving closer and closer to Kyiv. But Ukrainians are vowing to fight back with all they've got.
13 days that were there since the beginning of war, we were able to regroup, we were able to prepare. Our forces are stronger than ever. Our resistance groups are ready to fight. We are ready for a siege if it happens. And the only thing that we do really need right now is the protection from the air.
The final assault will no doubt be a bloody and deadly one on the capital of Kyiv, as Russia will look to end the invasion by capturing the citadel. Ukraine, however, has made it clear they will ensure it's no walkover for Putin's army. Bureau Report, India Today.
That's right. There are two wars being fought at the moment. The war on the ground between the Russians and the Ukrainians, and the war that the world is facing as economies go into a tailspin. The United States is now planning to raise the stakes in the economy war on Russia. President Joe Biden is set to ban oil imports and energy products from Russia. Moscow has threatened to retaliate by stopping gas exports to Europe that is crucially dependent on Russian gas. As the oil wars threaten to spiral out of control across the world, global economies, including in India, are beginning to struggle. Oil prices could go up. The rupee is falling towards an all-time low. Stock markets are volatile. Our other big focus today is on what does Ukraine mean for the Indian economy and indeed for fuel prices for you and me. Take a look.
Missiles, airstrikes, bombings, evacuation. This is the war you see. There is another war raging, the one you don't get to see. The Russian invasion of Ukraine has triggered a meltdown in global economy, the effects of which could last for months. The immediate impact is on crude oil. Brent prices have jumped from $95 on February 24th, when the war started, to $127 in just 13 days. And now US President Joe Biden is banning oil imports from Russia. US has imposed a ban. Russia says it will shut natural gas supplies to Europe. Moscow warns an escalation in the economic war could push crude prices $300 a barrel. European nations are worried that President Vladimir Putin might well use the gas weapon. The EU nations have the most to lose. While US imported only 8% of its oil supplies from Russia last year, Europe gets 40% of its requirements from Russia.
The increase in the price of oil, gas and raw materials has and will have consequences on our purchasing power. The amount of the heating bill and the cost of certain products is likely to increase further.
The crisis comes at a time when the global economy, coming out of a pandemic, was already bracing from rising inflation. All this has spooked the global markets. The S&P 500 started the week falling 3%, its sharpest decline since October. The Nasdaq Composite dropped 3.6%. It is now around 20% below its November highs. Back home, the Sensex on Monday dropped 2.7%, or nearly 1,500 points, to hit a 7-month low of 52,843. While it recovered a bit on Tuesday, the future is uncertain. Add to this the fall in rupee's value. The currency breached the 77 mark against dollar this week. The rising oil prices and drop in rupee's value are bound to impact India's budget numbers as well. The world is in for tough times ahead. Bureau Report, India Today.
So is the world staring at another recession on the back of what happened with COVID? What happens to these oil wars? What will it mean for oil prices? And importantly, what will this war cost India and the Indian economy? How will it change budgetary estimates in a critical time? Those are some of the questions I'm going to raise. We've got eminent economists joining us from different parts of the world. From Singapore, Taimur Baig is Managing Director and Chief Economist at the DBS Group in Singapore. Sunil Sinha is Economist, India Ratings and Research here in India. Siddharth Sanyal is Economist with Bandhan Bank. And Siddharth Zarabi is Managing Editor, Business Today TV. Appreciate all of you joining us. Let's cut the chase and come to the big question and ask you all that. How bad could it get? Dr. Baig, we've got the price of global crude oil soaring to a 13-year high yesterday. Brent crude surging to $139 a barrel. The rupee potentially going to an all-time low, 77 rupees to the dollar. We've got stock markets volatile. What's your sense? How bad could it get if this war gets prolonged?
I would begin with taking context, which is in real terms, we're not at an all-time high as far as oil is concerned. The rupee has weakened a bit, but overall, it's been a bastion of stability over the last 4 or 5 years. India is blessed with very strong foreign exchange reserves and looking at this crisis from a position of strength in the sense that its current account balance is fairly under control. We also should recognize that global purchasing power is substantially more than it has ever been if you look at the last decade or so. So, yes, this is bad news. Yes, it is commanding headlines and it should worry us because we are coming off a pandemic. We are fragile. But at the same time, buffers, whether it is in emerging markets or in developed markets, are not trivial. So we should take some stock that we are able to take some of this upside to the price. It's not going to be pretty. It's not going to be comfortable. But that doesn't mean we're on the precipice of a global recession, a complete mayhem a la 2008.
Interesting. You believe this is not complete mayhem. Siddharth Sanyal, Chief Economist, Head Research at Bandhan Bank, do you agree that it isn't as bad as some people are suggesting, that this could, if this war continues and the US President decides today to ban Russian oil imports, only get worse in the days ahead? In the short term, will it get worse?
It's indeed a very, very tricky situation, no doubt about that. In the budget about a month and a half back, when the calculations were made, oil prices were possibly slated at around $75 a barrel for the next financial year. Now it's close to 130. And even if the full year average turns out to be somewhere around $100 to $110 a barrel kind of a zone, that also means that will be 30-40% kind of rise in oil prices. And every $10 odd of rise in oil prices means something around 0.5% of GDP additional pressure to India's current account deficit. Clubbing with the subdued sentiment on the FII flows, it can be pretty messy for the rupee. Having said that, the only positive thing where I might be sounding a bit similar with Taimur is that if we see some of the recent difficult times for India, like the Lehman crisis time or the 2013 taper tantrum time, India gets more rogered when it's relatively on a weaker footing, like the taper tantrum time when it was clubbed in the fragile five group. We are not in that kind of a zone at this moment, but all emerging economies, including commodity importers, will have a tough time over the course of the next few months, and India will not be any exception.
Dr. Sunil Sinha, your concerns, particularly given the fact that the EU is majorly dependent on Russian oil and gas. Russia is European Union's biggest oil partner, supplies 40% of EU's natural gas imports. As Russia gets encircled economically, surely India will face some part of the heat. How will India be affected in your view?
Rajdeep, let me start by saying that the trade relations between India and Ukraine and Russia are not too big a concern, because only 1.8% of India's total trade is with Russia and Ukraine in the direct sense. So to that extent, India is not going to get impacted directly. But yes, the indirect impact on Indian economy is going to be much, much larger, simply because we are a net commodity importer country, and a significant part of that is oil. And the way the oil prices have gone up, certainly it will have a first round effect and then subsequently the second round impact. We just did some basic calculation, and we found that a $5, a USD $5 increase in oil per barrel actually translates into our current account deficit increasing by 6.6 billion. Similarly, a 10% increase in petroleum products can translate into a retail inflation going up by 42 basis points and wholesale inflation going up by almost 104 basis points. So if you take all of these into account, then certainly it will be going to adversely impact the economy. However, One of the things that we must understand that we have also gone through fairly difficult times over the last 2 years. And in these 2 years, what has happened is that a fair amount of resilience has been built into the system, particularly if I were to talk about the corporate sector. Corporate sector has deleveraged, itself to an extent that they are in a much better position to withstand these shocks. Similarly, even at the economy level, our forex reserve will be able to withstand some of the shocks. My key worry would be that consumption demand, which is still down and out, if it gets impacted adversely, then that can have a more, not short-term, but medium-term impact on India's growth story.
That's precisely it, isn't it, Siddharth Zarabi, that here was Nirmala Sitharaman a month ago at in the Union Budget 21-22, sort of charting out a roadmap for what lay ahead after 2 years of the COVID pandemic, hoping that the worst was over. Now we have the Ukraine war, Siddharth. How does that affect budgetary estimates? If oil starts continuing to go up, it's $139 a barrel, it continues to go up over the last couple of months because of elections. The government seems to have taken the conscious decision to keep oil prices under control. But come tomorrow, if oil prices start rising, consumption demand continues to fall, many of those estimates of Nirmala Sitharaman when it comes to growth will go for a toss. How concerning is this Ukraine war the longer it continues for those in the finance ministry, Siddharth Zarabi, which you track so closely?
Rajdeep, you're absolutely right. All the good work done so far and announced in the budget for the next financial year to bring India's economy out of 2 years of COVID threatens to be undone by something that the government did not anticipate. When on November 4th, the clock stopped moving and prices stopped magically increasing every day, all of us assumed that there is an election that is there, but no one knew that oil, which was averaging around $70, would nearly double to $140. The last 12-13 days have been an absolute shock, and I think it is going to be one of the worst economic shocks, a complete black swan event for the budget and the center's finances, not just because pump prices may increase or may have to increase accordingly if the entire increase has to be passed through, but because it will have second round impacts. You are now clearly looking at a post-election spike in inflation for the average Indian. Edible oils, fertilizers, gas prices have already been increased because it is deregulated completely and there is one monopoly supplier. So we are going to see a second round inflationary impact. The government did what it needed to do politically, but I'm sure no one had anticipated that the United States will decide to ban Russian oil imports. And Rajdeep, just one last point. That decision has not yet been announced. Everyone is saying that it is imminent, although I personally believe that the US presidential spokesperson offered some ray of hope. And now finally, Russia has warned that prices could go up to $300. So in hindsight, the decision to stop the clock on November 4th, and today is the 8th of March, we don't know whether something will happen after the 10th, is going to cost us very badly.
Let's put up those oil numbers once again. And Taimur Beg, when you say that, you also seem to believe that the Indian economy is resilient. But when we look at oil prices in particular, we're looking at gold at the moment, which has zoomed up. But just take a look at oil on fire. If it's doubled now and, we are at 127 to the dollar, the fact is that is there a fear that if oil prices continue to surge, the impact it will have on inflation? There was already the concern because supply lines were hit during COVID times of inflation being the real threat to any growth story. Now we have a situation, if oil continues to go out of control, what is the impact likely to be on what, as Siddharth put it, a second round of this inflationary spiral?
It will be a global shock. The whole world is in this together. We will all see prices go up. In a country like India, inflation will go, say, from 5 to 7.5%. RBI might have to do something. Budget deficit may be wider. growth might be slower by 100, 150 basis points. So instead of 6.5, we'll be talking about 5 or lower. We have seen much, much worse just 2 years ago. Mother of all stress tests in 2020. So that's why I'm keen to make sure that we see all these shocks, all these developments in context. Oil going to 140 is worrisome. There is no sugarcoating that, but we have been here before. Just 10 years ago, in real terms, oil was much higher. India saw through that. India can see through this too.
No, but doesn't it affect growth projection? Doesn't it affect consumption demand? The fact is that, you know, from your vantage point in Singapore, don't you get a sense that should this continue, you look at emerging, are you saying emerging markets are better placed today to handle this Ukrainian war than, let's say, EU or those who are directly in the line of the conflict?
Well, oddly enough, some emerging markets are in a sweet spot. I would not necessarily put India at the very top of that resiliency index. There are some countries in Northeast Asia and Southeast Asia which might be even more resilient than India, say a country like Malaysia, which is exporting oil. But by and large, compared to where things were a decade ago, when India suffered mightily, when there was an external shock and the rupee depreciated far more than anything that we have seen in the last few days, this is nothing compared to what happened in 2013. So that's the point, that compared to the previous episodes of extreme fragility, India is better able to take the shock. It's a shock, no question about it. It's negative, no question about it. But can we take that punch? And I think that the punch absorbing capacity is just a bit more now than it was, both in terms of time as well as the cross-section of all other emerging market economies.
Siddharth Sanyal, you want to build on that? Because this whole fear of inflationary spiral, an inflationary spiral going out of control, putting the Reserve Bank under pressure, putting interest rates under pressure, what does it do to the growth story?
I'll possibly take a step back and see growth in a different way. What are the big major drivers of growth in India and as well as in any economy? It's either consumption or investment or government spending on net exports. Now, in case of India, the biggest chunk is private consumption, about 2/3 of the economy. And that private consumption had just started coming back in the last about a quarter and a half, as revealed by the RBI's consumer confidence surveys. Now, the big question is that if there is a little bit of upward pressure on interest rate or expectation of that, as well as pressure on oil prices and inflation in general, that's a big question mark. Obviously, the net exports part, that particular bit will also be negative, and additional subsidy spending, etc., if at all, on the oil side will reduce the government's ability to put the government spending part somewhat higher. So from that point of view, it will be a pretty tricky situation, and 0.5 to 1 percentage point kind of reduction in growth if the situation persists for about a few months or so is not ruled out. Having said that, I would say that given that this inflationary phase will be fairly logistical disruption oriented, I would expect that there should not be any big knee-jerk reaction and try to fight the inflation battle just on the interest rate front. What complicates the matter is that when the pressure comes on the currency side, that complicates the matter on the policy response side a lot more. So we have to be very careful on that, how exactly we manage on the currency front. So we have to be, all policymakers typically become a lot more concerned if the currency come under a lot of pressure. So we have to be very worried on that particular front.
Dr. Sunit Sinha, do you see the rupee coming under further pressure in the weeks ahead?
Well, Rajdeep, I mean, it's already there. I mean, as you also pointed out, and we are seeing a sudden, a depreciation in the rupee. Although I concur with the view that we are nowhere close to the 2013 situation, because we have a fairly good forex reserve. But I think the bigger concern for the India story is that I mean, although there are still too many moving parts, and really how they will interact and what will be the net outcome is very difficult to predict. But at least from the point of India's growth story, particularly the consumption demand, what I feel is going to be extremely challenging both for the government as well as RBI is that here is a budget which essentially try to address the demand side issues, may not be through the consumption demand, but certainly through the investment demand. On the other hand, RBI also in its policy review in the month of February tried to support the government's stance of propping up growth. But here is a shocker that is coming to you, which really leaves very little room for RBI to continue with its policy in the coming month of April. So the likelihood is that if they have to unwind the loose monetary policy, and if there is hardly any more fiscal space available to the union government or for the state government to really support the demand, then certainly the kind of growth that we were expecting for fiscal year 23 will not be there. It will be much, much lower than that. And that itself will have,
Let me take what you're saying
for household consumption.
Let me take what you're saying. I want to take what you're saying to Siddharth Zarabi, because does the government of India have a plan B? Do they have a plan in place, given the fact that many of the estimates, as you've also said, budgetary estimates are now going for a toss? I mean, at the moment, we are on day 13 of this war. If this continues for another month, if the sanctions tighten, if we see the conflict escalating, does the Indian government have a plan B for how it's going to affect the economy?
Rajdeep, a plan B for what is clearly a black swan event did not exist, but over the last 2-3 days we have got the following 2-3 hints. The first hint, that the government will consider taking a part of the blow as far as the end consumer is concerned on itself.
So are you telling me, that oil prices will not rise in the next week? Are you saying that there will be not a major jump in oil prices now that the elections are over?
Rajdeep, with the Modi government, it is very hazardous to take a guess on timelines. What I was saying was 3 things. One, the government may decide to absorb a part of the blow by another excise tinkering, what had happened last year, if you recall. 5 rupees and 10 rupees were cut. The second thing would be a staggered pass-through of the hike, not in one dose. I think a lot of observers are making a mistake by creating a scare that the entire increase will be passed on to consumer. Won't happen. Remember, prices were supposed to move and are supposed to move on a daily basis. It was artificially stopped. Once it is restored, the oil companies will perhaps look at daily doses. The third aspect is, how long will this spike in crude prevail? You know this better, Rajdeep, that this war that Russia is prosecuting in Ukraine, and that will end. But the biggest decision will be if the United States decides to switch from Russian oil. That decision has not been made. The moment sweet Farsi crude, which is Iranian crude, comes into the market and Venezuelan output increases, the crude oil market will stabilize. So we are perhaps looking at a short-term shock, like you said at the beginning of the show. When we are discussing all these calculations, mind you, we should be looking at annual average price of crude and not on daily basis. So I think after the short-term shock, things will get fine. But what the government will find it very difficult to control is the secondary inflation spiral, because that is really not in its control. And that is where the problem will come. I think for the government to head back to the drawing board on finances, on central finances, and for the state governments will now become a clear necessity.
So therefore, Dr. Beg, in conclusion, give us the overall picture. How do you see the world emerging out of this Ukrainian crisis? It's come on the back of 2 years of slowing down of the economy, recession in several parts of the world because of COVID. How do you see, therefore, the immediate next, let's say over the next 6 months, what do you see, given the fact that this conflict appears not to end in a hurry?
I may sound sanguine in the context of India, but in the global context, there is not that much room for complacency, of course. There are many emerging market economies that rely heavily on food imports, and the spike that we see on wheat prices is a very big source of concern. There are many countries which have far worse current account dynamic than India, and you worry how those countries will survive, whether it's through their weakness of their exchange rate or having an outright balance of payments crisis. So oil at 100 something, 10, 20, 30, whatever you call it, if it sustains for several months, it's very problematic. But it is also very problematic for the wealthier countries of the world, which is why I think that supply side response, be it from Iran or strong arming the Saudis and the Qataris and the Emiratis, I think will be done by the West. There will be some switching away from Russia. Russia might find some alternative buyer in the form of China. Strange bedfellows would be made. So we will see statecraft around this high oil price evolve country to country. So in the case of India, for example, the Rashtra or statecraft around oil price, it's been, we've been there, done that many, many times. This is not the first time India is dealing with a big oil shock and the issue of subsidy or what to do with interest rates. Mind you, almost a decade ago, Raghuram Rajan was brought in as the governor of RBI precisely when India was going through a massive spurt in inflation. And what did he say at that time? You have to address the inflation issue regardless of the source. You can't hide behind it by saying it's only coming from oil. Hence, RBI will have to act. Hence, the government will have to act by passing on some of the increased prices. But again, we have been here before. This shock is substantial. This too will pass. It is not something that can be surmounted. The world has been through far worse in the last decade or two.
And very quickly, therefore, you see the volatility continuing across markets, including we've seen NASDAQ entering what many believe now is a bear hug. Therefore, those invest in the markets will continue to go through a spell of volatility in the next month or two?
Absolutely. I have so far refrained from talking about financial market implications, which are fairly dire at this moment. We came into 2022 all the way a bit fragile because of the Fed rate hike narrative. Now, on top of that, we have the risk of a stagflation, which is very bad for asset classes across the board, perhaps with the exception of gold and energy. So it is time to be defensive as far as the financial markets are concerned. No question about that.
Okay, let's leave it there. Clearly, these are difficult times. Good to know that perhaps the Indian economy has the resilience to tide through these times, but many of those projections are clearly for 22-23 now facing a huge question mark. The good times are not coming, frankly, in a hurry, clearly. Thank you all very much for joining me here on the news today.